Imagine a sudden 100 pip spike in the US dollar Canadian dollar pair. It happens without warning, and the technical indicators you've perfected are silent. Many traders immediately dive into historical price action, hunting for a chart pattern to explain it. But the cause of that spike usually isn't on the chart. The drivers of the currency market exist in the physical world. They are rooted in the movement of real goods across borders. Ignoring these underlying commodities means you are trading with only half the available information. You are watching the effect while ignoring the cause. This foundational relationship is known as the commodity-currency link. It is the rule that a country's economic value is tied to the raw materials it pulls from the ground, or the energy it was to import to function. By monitoring the price of those materials, you can see the fundamental pressure building on a currency before the price action reacts.
Success depends on mapping these data tethers side by side with your standard Forex pairs. This adds a layer of macroeconomic context to your technical setups, turning a one-dimensional chart into a map of global trade. Gold, traded as XAU, acts as the primary store of value. During conflict or inflation, capital flows from paper assets into physical bars. Because gold is priced in US dollars, there is a rigid inverse relationship. When the dollar weakens, it takes more of them to buy an ounce of gold, pushing the XAUUSD chart higher. Traders watch three specific drivers: sharply rising global inflation, falling bank interest rates, and sudden political instability. A sustained move in gold reflects a structural shift in investor confidence toward the dollar and the broader global economy. Crude oil is the industrial pulse of the global economy. Every price swing creates immediate winners and losers. This chart shows the link for oil exporters like Canada. As prices rise, Canada's profits increase, strengthening the Canadian dollar. However, Japan imports nearly all its energy. Higher oil prices drain their trade balance, weakening the Japanese yen. These correlations can be violently disrupted by production quotas set at OPEC meetings or sudden supply shocks in producing regions. When global supply or demand shifts at this massive scale, the impact on correlated Forex pairs is almost immediate. Industrial metals provide a similar tether. The Australian dollar's value is heavily dictated by the price of its massive iron ore exports. In New Zealand, the national currency is tied to a different physical asset, the global export price of dairy products. Regional droughts or poor harvest cycles are often the earliest indicators of a currency move. The physical reality happens weeks before financial markets adjust. Watching these soft commodities provides a view of the market that price action alone cannot capture. Use this data as a filter. If the Australian dollar rallies while iron ore falls, that divergence is a warning. But when the currency and commodity move in the same logical direction, you have convergence. This validates your setup. Proactive traders use this filtration system to separate high-probability moves from false breakouts. Respect the volatility of the physical world. Commodity prices are prone to sudden, violent gaps that can easily overwhelm a stop loss. You must adjust your position sizing. Because these trades require wider stops to survive the volatility, you have to reduce your total risk on every position. Always watch the US dollar index, or DXY, which is a metric that measures the dollar's value against a basket of major foreign currencies. Since commodities are priced in USD, the DXY applies pressure to the entire board at once. Succeeding in these markets requires a strict discipline regarding risk and a constant awareness of the dollar's health. Integrating commodity analysis connects your trading to the actual mechanics of the global economy. You can access these markets through contracts for difference, or CFDs, which allow you to speculate on price movements in gold, oil, and agricultural products right alongside your Forex pairs. Utilizing advanced charting tools allows you to monitor these correlations and identify the strongest trade setups in real time. Open an FXNX demo account to practice trading commodity CFDs and major Forex pairs together. Start using the physical world to secure your digital trading edge.